So we appreciate you sticking around for this really important conversation. We are going to talk with three very prominent figures in the world of finance, business, and investment about the outlook for 2024, and perhaps have some fun along the way as well. So, Your Excellency, I thought we could begin with you with some high-level thoughts on where we stand today and where we're going. In your letter to partners, you said 2024 has the potential to be what you called a pivotal moment for inclusive growth. So can you expand on that for us and ultimately what it means for the UAE?
24 is a very, very important year, in my opinion. When you look at the next 5, 10 years, 15-year trajectory going forward, particularly when you look at the sectors that the UAE is focusing on, and de facto the sectors that we as an investment institution, Mubadala, are focusing on. So when you look at key themes, energy transition, technology, artificial intelligence, within that, digital infrastructure. These are all spaces that are undergoing a massive transformation. I would say a profound transformation that today, when we look back in 10 years, we will look at 2024 and probably 2023 as really critical foundation years for a massive investment journey in these spaces, that investment institutions and countries, in this case, that took the right decisions in these two, in my opinion, critical years, 23, 24. 10 years from now, we'll look back I think, and we'll be very satisfied if they took the right decisions.
When you look at the business environment today, what is the Mubadala approach to deploying capital and building businesses in this environment? Where will you be specifically focused in the year ahead?
So we look at two aspects. One is themes, which is what I've described. So the sectors I've described, these are all sectors that we have a particular focus on investing in and continue to invest in, because these are areas we've been investing in for years. And two, on the other hand, we look at growth. Where do we see growth? And that, globally, we take a global view. The markets that we see steady growth, we see potential for a step change in their economies. That's the countries and geographies we like to focus on.
Okay.
And then, obviously, the hybrid, where these two combine, that's the magic spot.
Steve, welcome into the conversation. What's your view on the year ahead, and what are you watching specifically in terms of investment opportunities, perhaps risks on the horizon as well? How are you assessing the environment right now?
If you look at 2024, biotech's emerging as a global, giant industry that's going to save lives and have people live better. So Bain Capital has massive investments in biotech, and my family office does as well. The second is the rage, artificial intelligence, and I don't like to call it that. It's more like machine learning, but it's going to, I think, have a huge impact in productivity throughout the world, and it's going to be an exciting tool. And then third, we have this major, I'll call energy transition going on, and there's both risks and opportunities in that, but we're going to have to see an energy revolution in the next 10 to 20 years as well. So those three trends are going to dominate it. And then in terms of macroeconomics, we've had a period since the crisis where massive amounts of debt have piled up. People are complaining interest rates are now T-bills 5.5%. But what you have to realize is, in my business lifetime, in the last 100 years, the average T-bill rate has been about 5%. It's not been 1% or 1/10 of 1% where it went down to in the previous period. So I think the fourth trend is going to be a kind of a financial walk back of quantitative easing, but that's going to take 10 to 20 years. And I don't think you're going to see low interest rates or much lower interest rates for a long period of time, so we're going to have to live with that, and that's just going to be a fact of life. There's some good to that, because there were so many speculative things done and businesses started when capital is free. You tend to make bad decisions, so it'll put some discipline upon the markets. But I think we're really on the cusp of a revolution in biotech, revolution in technology and artificial intelligence, and this energy transformation that'll drive a lot of the world economies going forward. And Abu Dhabi's been at the forefront of that and well positioned with the capital and resources that they have.
Okay, fascinating. And hold that thought on interest rates because I wanted to come back to that point, but we'll bring it over to Ross next. Ross, what is your view on the private equity landscape, the opportunity for deal making in the next 12, 24 months, and what are you looking at specifically?
I think if you look at the world that I'm in, which is logistics and it's supply chain, and we develop across the United States big logistics centers and all throughout Europe. And so right now the supply chain was healing from COVID, but now we're starting to see, there's a U.S. perspective, but with the decoupling out of China, you're now seeing a lot of reshoring back in our country, but we're seeing a really large boom going on in Mexico. And so we're very focused now. We used to have a big east-west practice on trade. In North America, it's becoming north-south. And now with the supply chain disruptions with the war in Ukraine, Gaza, the Houthis, the Red Sea, and the drought with the Panama Canal, you're starting to see the supply chain shift again. And we got potential strikes on the East Coast ports and the southern ports in the United States. So we are very busy keeping up with the supply chain and building industrial buildings. And Steve, to your point with interest rates, a lot of our competitors now can't build. They're having a hard time getting bank debt. And so in our world, our core business is very strong. We're very focused. And then, as a lot of my friends like to say, we're very long Texas, because Texas is going through an amazing boom right now.
Just on the outlook for interest rates, let's focus in on that point for a minute. So far, we've seen the US Federal Reserve really pushing back on expectations for an earlier than expected cut. That would be around March. Now the expectation is closer towards June, July, maybe even in the second half of the year. So if interest rates are going to stay higher for longer, this is really critical for us in the Gulf as well because we have the currency peg. What does that mean for your investment decisions? Maybe Ross, do you want to pick up on that first and then we'll bring it over to Steve. Ross?
Would you like me to go? So, to me, it'll be higher longer, is my view. And the U.S. economy is very strong. And as long as you've got this strong economy, the Fed will not be motivated to lower the rate. So I think the market's jumped out in front of a low rate. And so I think it's a little bit higher longer. And as long as the United States government overspends at the magnitude we do, we have an artificial economy. And the economy is being artificially propped up by deficit spending, which keeps the interest rates higher. So the Fed is trying to slow the economy down, but the White House is trying to speed it up. And you've got this odd condition going on in the United States. Now, in business, there's a lot of business. You can stay busy, but you've got to worry long term, how do we handle this deficit? And so that's the thing I worry about as an American, what happens with these deficits. And so I think the rates are going to be up a little bit longer than people believe, and we're in an election year. And so politically in an election year, our political leaders will do everything they can to avoid a recession. And so every trick in the book will be pulled out not to have a recession, but should keep the rates up longer.
So Steve, should the Fed be cutting rates now?
I don't think the Federal Reserve, it's because it's too strong. That's why I think it's going to be later in the year if they cut it all.
Okay.
But if they do, people are going to be pretty excited. So White House will be happy.
Your thoughts, Steve?
I agree with Ross. There's only upside for an interest rate cut. I think they'll really slow roll it. We did a study at Bain looking at all economies in the last 200 years that increased the money supply over 50%, which has happened in the United States in the last 10 years. And every single one of them, there was like a 99% correlation, had higher interest rates and higher inflation driving interest rates. So this walk back of quantitative easing is going to take 10 or 20 years, a slow roll for that. And again, normal interest rates have been in the 4.5 to 5% range for the most of the history of the economy. It's not been at the low level. So I think people got used to this drug of low interest rates. Valuations of growth companies were crazy at the time. We didn't do many of them at Bain because we believe in a fundamental analysis. But it's going to take a long time to get out of that. I think Ross is right. We have to figure out a long-term plan to walk back the deficit, because as long as you have that deficit there, the money supply is going to be out there, and you're going to have high interest rates and all the things that brings with it. But you go back, fundamentally, the U.S. economy is strong, and it's all on a relative basis. The fourth major macro thing, which Ross referred to, the decoupling with China, that's also going to affect global trade flows. I don't think it's going to be terminal, but you're going to see different blocks built now between the West and the Chinas and the Russias in terms of trade, and that's going to be another 10-year dynamic that we're going to see in logistics and supply chain and all the rest of it.
Your Excellency, tie all of this together for me, because what we see is the United States being Mubadala's biggest investment market at the moment. Is there any suggestion that that might change soon?
So I think the way I would put it, the United States will remain, I think, a very attractive market. The United States has a very clear, as Ross and Steve mentioned, I'm not going to repeat, very clear trajectory in terms of how that economy will continue to grow. It's a hub for innovation. It's a hub for innovation. I think in that sense, difficult to compete with that creative, innovative economy that the U.S. has in terms of the cash flow, the public market systems it has there, access to talent. I mean, the U.S. is quite well positioned and quite far ahead many other countries. But on the other hand, there are a lot of other interesting stories happening around the world. So you look at, for instance, at India. India today is the largest population in the world, 1.4 billion people. It is one of the most digitalized economies in the world, with a significant portion of that population with access to 5G. I saw a slide a couple of days ago that showed in light the amount of 5G network availability in India compared to many places in the West, i.e. the United States and Europe, and India is actually quite advanced in that stage. So it's it's an attractive economy, growing at 7 to 8% GDP per year, largest growing middle class. So that's an interesting economy that one has to keep a very close eye on. And infrastructure is going to be a key driver to growth there. India, I think, my last understanding, imports about 82% of its energy requirements. So you can imagine the amount of investment that's going to go into energy infrastructure in India as it goes through that transformation. I wouldn't discount China. China, again, that's another 1.4 billion population country. That's 1.4 billion consumers, huge infrastructure build out there. And when you look at it today, the last 3 years have been quite challenging in terms of the market in China. You look at the market caps of many companies in China today that are positive cash flow, attractive EBITDA, and then you look at their multiples and that they're trading at compared to many of their peers in the European markets or the US markets or other Asian markets, they're actually quite cheap. And I think from an investor that's looking at a 5-10-year horizon, there's an interesting opportunity for sure there. So my point, I think, the world is big. There are opportunities all over the world. It depends what your investment appetite, what your risk appetite is. And when you're looking at growth and when you're looking at innovation, you have to, I think, be open-minded to both east, west, north, and south.
I wanted to ask you about the region specifically as well. When it comes to the next wave of development for the UAE, I think we've seen extraordinary progress, particularly since 2020, in this country and around the region. What does the next wave of growth look like, and what is going to drive it?
So I think this is actually one of the most exciting areas for the region, the UAE. I think the UAE is I would answer, and so I know we're running out of time, so I'll be very short in this. Since 2020, when COVID hit the world, the UAE took it as a challenge. And actually, rather than go defensive, the UAE went offensive across the board. In the healthcare challenge, but then in every economic challenge that COVID put to all of us, to the whole world. Supply chains, technology enablement, et cetera, et cetera. That 3 year from 2020 to 2023 and now going into 2024 was an unbelievably exciting fueling period for what I feel now is the next stage, which is this next 10-year journey. And this next 10-year journey is going to be focused on the human capital side of it. It's going to be exciting in the terms of all the themes I've mentioned. So energy transition, the UAE is one of the largest investors per capita in new energy transition projects, be it nuclear, be it wind, be it solar. So again, a huge buildup on the energy transition and energy generation side without ignoring, I think, a point that I think Steve mentioned, that also the conventional aspect of energy is not to be ignored. The energy transition, by definition, is a transition which includes future, green technology sources, but also the present, which still has to play a big part in serving the world, particularly if you buy into the next point, which the UAE is really investing in, the technology and AI revolution, which is going to require tremendous investment in data center capacity, in R&D, in all kinds of enabling infrastructure that's going to support this AI revolution. So I think the UAE is very much well positioned to take advantage and to be part of this next stage of economic development.
And you mentioned AI and technology, and I think it's worth just maybe getting Steve's perspective on this as well, because Steve, you have invested in a number of businesses through your career. You've invested in a lot of tech businesses in particular. A lot of the conversation on stage today has been about the performance of the Magnificent Seven and whether or not we are seeing fundamentals matching valuations in that space. What's your view? Are we at a 99 style kind of boom here that is likely to bust, or do you think that AI really has the staying power that maintains those valuations on Wall Street and that truly delivers a result that could change the world?
Yes. No, really, I'm being facetious, but the answer to the question is, we lived through the 99 tech bubble at Bain Capital, and I think in our 40 years of existence, we averaged 15 or 20 transactions a year. In 99, I think we had 0. And our limited partners were saying, what are you guys doing? We're paying a lot of money. We invest our own money in our own funds. We're the largest investor in our own funds, and we saw kind of a bubble happening. But what came out of that bubble were the Magnificent Seven. And so right now you're seeing in machine learning, AI, anybody that puts AI in their name gets a bigger valuation. But some companies will really succeed, and those big winners will win big because they'll have a natural ability to get out ahead, just like Google did, just like Amazon, Facebook. These are natural networking businesses. Now, in AI, I think there's going to be different flavors of it, and my hypothesis, there'll be 10 or 20 companies that can survive because you won't work with one global foundational model like a Google. There'll be domain-specific models, and there'll be models that are good for certain industries. So I think it's going to be a broader, group of companies that rise from this maybe what is a little bit of a speculative bubble right now. But I think it is for real. The productivity gains are enormous, and it frees up human capital to do other things. And so I'm not scared of AI. I view AI as, I can date myself, when I was in college, we still used, for accounting, I was an accounting major, still used slide rules. And people thought that when HP 12Cs came in, it was dangerous because we wouldn't be able to do math. But that was far from the truth. That just increased productivities, that brought us personal computers, that brought us now large-scale computing, and now AI. And so I think AI will be one of those 5 factors in the next 10 years, 20 years that changes everything.
Ross, can I get your take on that as well? And I ask because you have an extraordinary family legacy in technology. So
Sure.
You've seen what the history looks like. Tell us what the future looks like.
Well, AI has been around a long time. And today, the models have gotten to the point where they're very productive, very useful. But also, how do you enable AI? Data centers. And so we're very focused on building data centers around the United States and throughout Europe. And the power demand for data centers is staggering. And so where you put a data center, where they have the fiber, it becomes a very complex matrix. But if you can find that spot, you have a very strong business. So AI, you embrace AI. Every division of our group has an AI strategy, and we want to be out in front of where AI is going to go in all of our different businesses so that we don't want to be surprised. And we don't want to wake up one day and be out of business because we were naive or we had a blind spot. And so we're focused on it. It's going to be very productive for society, especially in the Western world. It'll be very productive. When you get into China, how do you program the AI model? What values are programmed in the model, and what global information will they allow in that model? As long as they have and control their information the way they do, their models will not be as competitive as the models in the West.
Really fascinating, and I think it's such an interesting space to be looking at globally and within the region. Steve, did you want to add something to that? Sorry.
I was going to say that the point Khaldun made and Ross made exactly resonates because people don't realize ChatGPT model, for example, the latest one, it was something around $500 million of just computing power, GPU, to load that model. So when you think about that with having 20 or 30 or 50 models out there, there's got to be technology that brings that cost down. Otherwise, we're going to bankrupt the world of energy. You just can't spend that kind of energy uses. Now, the good news is MIT and many places are working on artificial intelligence that won't take that kind of power load to load them up, and that will really be revolutionary, because right now, you know, that's why I was astounded. I said ChatGPT has to raise $10 billion. Well, it's because each model is costing $500 million to load. And as you go from version 4 to 5 to 6 to 7, that's an enormous amount of computing power, and that's going to have to come down. And I think technology will do that as well.
Really interesting. Okay, we only have a few minutes left, so let's do one quick rapid fire question. For the capital allocators in the room, for investors or anyone working the public-private sector here and around the world, what's one thing they need to be watching in the year ahead? Ross, I'll start with you. You're allowed to say Taylor Swift at the Super Bowl if you like, but tell me.
Last question.
I said you're allowed to say Taylor Swift at the Super Bowl if you like, but tell me one thing that investors should be watching, and why. And we say Taylor Swift because it's important. We were talking about this before.
Okay, but back to the capital allocation, I think as you look around the world, this is a very challenging time in world history. And you've got to really stay on top of what goes on around the world every day to track the issues. And it's very disruptive. I talked about the Chinese issues, China, Taiwan, the U.S. political. The one thing that unifies U.S. politicians is China. And there's a very strong fear of China in the United States, and that drives our policy. And that'll drive a big impact on investing. Then you've got the energy policies, and you see what's going on in Europe today, what happened with the Ukraine, cutting off of Russian gas. And now the Germans, you were dependent on Russian gas. Very quickly, they got rewired and have a lot of non-Russian gas, a lot of Texas gas taking care of Germany today. But what we're seeing out of Germany is they no longer can compete in the industrial world. Their energy costs are too high. So in our business, we're now seeing German factories leaving Germany, and they want to come to Texas, they want to come to the United States, because we have an abundant supply of affordable energy. And the Texas policy is all the above. So we're number one in wind, number one in solar, obviously number one in oil and gas, and very strong in nuclear power. That broad-based energy program gives your economy and your country a chance to compete with affordable, reliable energy. And so that, as an investor, don't overlook that basic thermal power load you're going to need. And go back to data centers and the demand for power on data centers. If we electrify the world, the demand for energy is going to be staggering. And you're going to need that thermal base load will play a critical role. And so on the Super Bowl, I was just very glad Kansas City won. Clark Hunt's from Dallas and a longtime friend, so excited about that.
Steve, one thing to watch in the year ahead.
You know, I think my biggest concern is something that brought humanity to where it is today, tribalism. Tribalism allowed humans to outcompete the other animals on the planet by working together, forming groups, cooperating. What's happened now is it's superheated tribalism, populism that is dividing the world. And we had a great period in the 80s to the 2000s where global trade went up 30 or 40 times from what it was. It lifted many people out of poverty, but now we're going back to tribalism. And tribalism couldn't kill the earth when we fought with sticks and stones and arrows and rifles. Now there are weapons of mass destruction, huge military forces out there. So I think the world has to step back and say, yes, people should be self-sufficient, but by definition, the world's going to have to work together to come up with a new system of trade, a new system of distributing that wealth, so we don't implode, the entire global economy. So probably since I've been in business, this is the riskiest geopolitical time because of this pullback into populism, tribalism, which has short-term appeal, but I think very devastating long-term effects.
Ian, Your Excellency, I'll give you the final word. Your thoughts on the year ahead and what capital allocators should be looking out for?
I would say, and I'm going to continue on Ross's point and maybe double-click, I think we are underestimating the energy demand and supply situation. I think the world is underestimating that situation. The demand is going to come much faster and much stronger than I think we are anticipating, driven because of this AI revolution we described, a huge demand that's going to come from data center capacity and other forms of huge drivers of energy demand. The supply situation is constrained. is constrained significantly. In the oil and gas space, we have underinvested over the last 10 years, and that's going to show its face in the next year, 2, and 3. And then when it comes to renewable energy, nuclear takes time, it's expensive, and will require a lot of capital. Solar and wind, again, to meet this demand is going to be challenged. We haven't yet cracked the battery aspect of it and storage. There is going to be a challenging period ahead, and I think people are underestimating, and I would, again, as a point of concern for allocators, pay attention to this. This is going to be an interesting challenge coming ahead.
Gentlemen, I want to say thank you so much for joining us on stage here today, and thank you so much for your insights. Ladies and gentlemen, please again make them feel welcome.